Welcome back to Investing Talk Podcast. We're really glad you could join us again. We're aiming to give you that bit of an edge, that extra insight. Today we're taking a look at a company that's, well, a really big name in cybersecurity, Crowdstrike. You know, the digital world, it just keeps changing, and the threats along with it. So keeping tabs on how companies like Crowdstrike are doing is honestly more important than ever. We've pulled together some pretty insightful source material for today's discussion. Our goal here is to really break down the key info, help you sort through the details, and give you a really clear picture of what's going on with Crowdstrike before their next big announcement. We'll touch on everything from what analysts expect to how they've done historically and what the market seems to be thinking right now. Before we really dive in, just a quick note for you listening. If you find these conversations helpful, please think about subscribing, maybe liking this, leaving a comment. It genuinely helps us out. And if you feel like supporting us a bit more, you can always buy us a coffee. Plus, if there's a specific company you want us to look into next time, just drop it in the comments. We really do like hearing from you.
Absolutely. And CrowdStrike is, well, it's a fascinating one to look at right now. The demand in cybersecurity just doesn't seem to let up. What I find interesting is how we can sort of blend the hard numbers, the quantitative stuff with, the market feel, the qualitative side, to get a really complete view.
Okay, let's unpack this then. When is this report actually happening?
Yeah.
And what's the general vibe, the expectations out there? So the date circle is August 27th, 2025. It's coming after market close, so that's when the official numbers drop. But what are we hearing beforehand? What are the analysts saying?
Well, the consensus is actually pretty tight this time around. For revenue, they're mostly clustered between, say, $1.1 billion and $1.2 billion. And on the earnings per share, the EPS, the Zacks consensus number, is sitting right at $0.83. It's worth pointing out, the company itself, back in June, guided for EPS between $0.82 and $0.84. And revenue also in that same $1.1 to $1.2 billion range. So, yeah, the street is pretty much in line with what management already signaled.
Okay, so expectations are aligned. What about the whisper number? You know, that unofficial buzz, the number that sometimes really moves the stock. Is there one making the rounds for CrowdStrike?
It's interesting. For CrowdStrike this quarter, the sources aren't really highlighting a strong definitive whisper number. It really seems like that $0.83 consensus is, well, pretty solid and widely accepted. Now, what does that mean? It could mean the market feels it has a good handle on things, maybe less chance of a huge surprise beat, or maybe it just puts even more focus on future guidance.
That makes sense. If everyone's expecting roughly the same thing for the past quarter, then what they say about the next quarter becomes critical. Speaking of expectations, history can be a good guide, right? How has CrowdStrike actually done in its last few earnings reports? Have they tended to beat these estimates?
Oh, absolutely. History is really useful here. And CrowdStrike, they have a strong track record recently. They've beaten the EPS estimates for the last 4 quarters straight. So, for example, Q2 2025, they reported $0.73. The estimate was $0.66. That's, what, an 11% beat? Pretty solid. Q1 2025, they hit $1.1 billion in revenue, right on the estimate, so a revenue beat there too. And going back to late 2024, Q4 and Q3, they beat EPS estimates by 12% both times, $0.74 reported versus $0.66 expected. So, yeah, consistent performers.
Okay, so a clear history of beats sounds good on the surface, but what happened to the stock after those beats? Did it just shoot up and stay there, or was it more complicated?
Ah, right. This is where it gets nuanced. Because, yes, we often saw those immediate positive gaps that jump right after the news hit, but those moves haven't always held. We've definitely seen cases where the stock gives back some of those gains as the market sort of digests everything. You look at the implied move from options, the straddle, it's usually been around plus or minus 7% to 9%, but the actual moves, sometimes they've been smaller than that, suggest maybe the initial reaction was a bit overdone or maybe profit taking kicked in. So yeah, a beat doesn't automatically mean a sustained rally. You got to watch the follow through.
Right, the immediate pop versus the lasting trend. Good point. So looking beyond just the headline EPS and revenue, what about the underlying health, the key metrics? What's the story there?
Yeah, digging into the fundamentals. The operational metrics look pretty strong. Gross margins, for instance, consistently above 74%. That's really healthy for a software as a service company. Shows they keep a lot of each revenue dollar. Revenue growth year over year, it's still there, definitely. But, and this is important, the pace of that growth has been slowing down, decelerating. Which isn't shocking, for a company maturing beyond that hyper-growth phase, but it's something investors watch closely. Profitability-wise, on a GAAP basis, they've shown slight net losses, so a negative net profit margin, But again, that's pretty typical for tech companies investing heavily in growth, R&D, sales, market share. What is encouraging is we're seeing signs of operating leverage kicking in, meaning as revenue grows, their operating costs aren't growing quite as fast. They're moving towards break even on that front. So the growth seems to be getting more efficient over time. That's a positive trend.
Okay, so growing efficiently, investing for the future. Got it. Was there anything specific during this last quarter that might shake things up, like a major acquisition, a big new product launch, anything like that?
Well, based on the sources, it seems like it was largely business as usual for CrowdStrike this past quarter, which sounds maybe a bit boring, but it actually means the results will really depend on their core execution. Things like, adding new customers, getting existing customers to spend more, upselling those platform modules, no huge external events like a massive acquisition or some game-changing product reveal reported that would likely skew these specific quarterly numbers dramatically. The focus is really on that steady execution.
Right. So no big curveballs expected from internal events. What about the wider world, the industry, the economy? You mentioned strong demand, but what's the mood in tech overall?
Yeah, cybersecurity demand is, like we said, really robust. The threat landscape just keeps getting worse, frankly, so companies have to spend. That's a major tailwind. And the tech sector itself has actually held up pretty well recently, performance-wise. But there's still that underlying investor caution. Valuations are high for many tech stocks, including CrowdStrike. And people worry about macro stuff, right? Interest rates, overall IT budgets maybe getting squeezed. Could that cause guidance to slip? So strong specific demand for what they sell, but operating within a more cautious, broader market. It's a bit of a balancing act.
Okay. And the analysts covering CrowdStrike specifically, what are they saying right now? Are they mostly bullish, bearish, or kind of holding steady before the numbers?
Their commentary seems pretty consistent with that general consensus we talked about. You see a lot of hold ratings, maybe some accumulate. Not a lot of major upgrades or downgrades right before the report. Price targets have been pretty stable, too. It really feels like a collective wait and see. Analysts seem comfortable where they are and are waiting for the actual results. And maybe more importantly, that updated guidance from management before they make any big moves.
Yeah, wait and see seems to be the theme. Okay, let's shift to the market itself. What's the price action telling us? How has CrowdStrike stock been trading lately? Big run up, selling off.
It's actually been pretty, flat to maybe slightly higher in the days leading up to this. We haven't seen a huge surge that screams everyone expects a massive beat, nor have we seen a big sell-off suggesting fear. That kind of sideways action often points to, divided opinions among investors, or maybe just a lack of strong conviction either way before the actual news drops. It lines up with the analyst sentiment, really.
Makes sense. And the options market. Always interesting to see what the traders betting on volatility think. What's the feeling there? What kind of move are they pricing in?
Well, options volume is up, which is normal before earnings. People are placing their bets or hedging. Looking at open interest, there's maybe a slight lean towards calls over puts, suggesting a bit more bullish speculation or hedging, but it's not extreme. It's fairly balanced. And the implied volatility. What the options prices suggest the stock might move, it's around plus or minus 7% to 8%. That's pretty much in line with how the stock has moved after earnings historically. So the market isn't pricing in some crazy, unusual swing, just, typical earnings volatility.
Okay, typical volatility expected. So putting all these pieces together, the tight consensus, the history of beats but sometimes fading rallies, the steady quarter, the market signals, what would a really good outcome look like? What's the bullish case here?
Right, the bullish case. You'd want to see revenue and EPS not just meet, but clearly beat those consensus numbers. Ideally, that beat is driven by really strong subscription growth. That's their core recurring revenue. You'd also love to see gross margins maybe ticking up a bit, showing better profitability per sale. And critically, a positive revision to their full-year guidance. Management saying, hey, things look even better than we thought. Oh, and a low churn rate customers sticking around and spending more, that would be a big plus too. Shows the platform is sticky.
Got it. Beat, weighs, strong underlying metrics. And the flip side, what would the bearish case look like?
Okay.
What are the immediate red flags we should watch for?
The main worry for the bearish case is probably guidance. If management comes out and guides lower than expected for the next quarter or the full year, that would likely hit the stock hard. They might blame slower deal closures, maybe cite those macro concerns we talked about, other red flags, signs of margin pressure, maybe costs rising faster than expected. That would suggest maybe growth is getting less efficient. And A slowdown in net new ARR, that's annual recurring revenue, if the amount of new subscription business they're adding each quarter starts to slow down significantly, that's a major concern for a growth story like this.
Okay, guidance is key. Watch the margins, watch the new ARR. Out of all of that, if you had to pick the single most important thing to watch when the report drops, what would it be?
Yeah, it really comes down to valuation, doesn't it? For a company like Crowdstrike, trading at a high multiple, the forward full-year revenue guidance is just absolutely critical. That's what investors are going to latch onto to justify the current stock price and project future growth. A beat on the past quarter is great, but if the outlook disappoints, the market can be pretty unforgiving with these high-growth names. That forward guidance really sets the narrative.
That really crystallizes it. Okay, so let's try and bring this all home. What's the overall feeling about CrowdStrike heading into this report? And what should you, our listener, be thinking about depending on your own approach to investing?
I'd say the overall lean is probably neutral to maybe cautiously bullish. Look, the valuation is definitely up there, no question. But the fundamental business seems strong, and that cybersecurity demand backdrop is just undeniable. So as long as they don't stumble badly on guidance, the setup looks okay. If we had to put a number on it, maybe like a 6 out of 10 confidence score for a positive outcome.
A 6 out of 10. Okay. What's the thinking behind that specific number? Why not higher? Why not lower?
Well, the track record of beating estimates definitely helps push it up. They execute well, that's the positive. What holds it back from, say, an 8 or 9 is that valuation concern, combined with the broader tech sector caution and those macro uncertainties. You just can't ignore the context. Management's usually pretty disciplined with their guidance, which lowers the risk of a huge negative surprise, thankfully. They don't tend to wildly overpromise. So yeah, 6 feels about right. Solid, but with caveats.
That makes a lot of sense.
Okay.
Last thing then, for folks listening, considering how to approach this,
Yeah.
what are some practical thoughts or strategies depending on how much risk they're comfortable with?
Sure. So if you're generally risk averse, maybe sitting this one out directly makes sense. Holding shares through earnings can be a roller coaster. You could always wait for the dust to settle after the report, see how the market reacts, and then decide. You miss the initial move, maybe, but you also miss the potential drop. Now, if you're more risk tolerant and you're okay with that volatility, options could be a play, like we mentioned, a straddle or strangle if you expect a big move but aren't sure which way. Or if you get a clear read on the guidance very quickly, maybe a directional bet, but obviously options carry their own risks and complexity. And then for long-term investors, people who believe in the cybersecurity story and CrowdStrike's position in it, maybe think about position sizing. The long-term trends are supportive, so maybe you don't go all in before earnings, but perhaps use any post-earnings dip, if one happens, as an opportunity to add to a position gradually. It's about looking beyond the short-term noise.
Excellent breakdown. Really practical advice there. It is fascinating, isn't it, how much weight that forward guidance carries compared to the actual results, especially for these kinds of companies.
It really is. And connecting it to the bigger picture, it just underscores how markets value growth, especially in tech. What management says about the future often shapes the narrative and moves the stock more than what they just did. It's all about those future expectations and whether the company can meet or beat them.
So for you listening, it really brings up a key question, doesn't it? How do you personally weigh that solid track record against the market's intense focus on future guidance and those broader economic jitters? Finding that balance is crucial when you're looking at growth stocks. We really hope this discussion gave you some solid points to think about as CrowdStrike gets ready to report. Thanks so much for tuning in to Investing Talk Podcast. Until next time, keep learning, stay informed.